that commitment to infrastructure that Riley articulates there, that money, is it proving out?
Hey, thanks for having me. I think so far, what we have seen looking backwards, last 12, perhaps 15 months, Meta is probably the best poster child in providing kind of quantifiable returns on investment in AI infrastructure. By that, what I mean is the company has demonstrated accelerating revenues. The company has demonstrated upside to industry growth and a lot of other bells and whistles around AI investment. So looking backwards, yes, definitely. AI is the poster child of showing return on investment. Looking forward, that's the question mark in the stock today.
Okay, so they've been able to make it work for advertising in the business model. But now for superintelligence and the race to be won, what business model does that align itself with for Meta? How much are we going to see generative AI affect the way in which we interact and communicate?
I believe the problems that Meta is trying to solve using AI and using superintelligence are just compounding with the data that they're collecting and the possible business models that they are exploring. Remember, they have invested a lot of money in the augmented reality, virtual reality glasses. They have been working on that over the last 4 years. There has been a reset in that, and now probably we are not now looking at 2027 for the actual launch. So there is a timetable to build AI within those glasses. I believe that's going to take up a lot of money. And second, integrating the 3 apps that they have. Those are the 3 largest mobile apps in the world with billions of people using on a daily basis. To make those apps super intelligent and to make them extremely sticky is probably a monumental investment opportunity for them. So these two are orthogonal investment opportunities, but I think both are probably going to be something that Zuckerberg is going to be fully invested in.
At $1.87 trillion, is that a full valuation for this full investment theme that you have, Rohit?
I believe the layers unpacking in the future, it's just going to be something that we are going to be excited about. I feel we have still not yet scratched the surface of the potential of Gen AI on a very large multidimensional platform like Meta. And I feel Zuckerberg has the founder whip, if you feel. He's investing behind this as if it's an existential, once-in-a-lifetime opportunity, even bigger than when iPhone was launched. So I feel the excitement and the kind of attitude that they can disrupt the apple cart while redoing something new is something that investors are willing to be patient around on Meta stock, and so are we.
You're patient, you still got a buy rating. Compare and contrast to some of the other key companies that you do analyze. When I'm thinking that you're looking at Alphabet and Amazon, are they as bigger winners? Have they been as bigger winners in the capex they've already spent? And do they have as good a road map as you currently articulate for Meta?
So far, I think Meta is the clear winner. Amazon is so far probably a number 3, and Google is a number 2 player, number 2 winner as far as demonstrating returns on Gen AI investments. Having said that, I think the complex problems that each of these very large, massive companies are solving or trying to solve using AI are essentially compounding with every day. And that is leading to more investment and more investment needed to solve those problems. Think of the multidimensional kind of e-commerce, cloud, advertising, Prime Video, same-day delivery. All of these elements can be optimized using AI, and at any given time, probably Amazon is focused on maybe 1 or 2 of those. So I feel kind of over the longer arc, the bigger winner is probably going to be a company like Amazon, given the surface area of improvement they have, the potential. But in the near term, probably a one-trick pony like Facebook has executed better in the last 18 months, and they are demonstrating better returns today.
I hate to talk about the near term, because I know you're a man who likes to give longer term projections and price targets. But when you're seeing a sell-off like we've had after the last couple of days, a lot of it tied up with worries about ROAI and the report coming out of MIT, the Gen AI divide and the state of AI in business. Do you give credence to that? Do you think there's a lack of nuance, or do you think actually we should be worried about how much we're investing in the returns on it?
I think there are two ways to interpret MIT and just the overall questions that are being raised. That, hey, by the way, we applied Gen AI algorithms, LLMs, we invested so much, but we are not getting the returns as much as we wanted. I think the way these large companies are trying to solve really large problems, the efficiency gains that they will provide over the next 12 months are something that we are very confident on. Whether that translates into revenue uplift, that remains to be seen. Only a company like Meta has demonstrated that. Other guys are kind of TBD. That's why, from an AI winner standpoint, Meta is the one to buy on this weakness today.